The market tone is changing. The implications are quite negative. Now, this has happened before. We're going to show you what happened last time around and what this means for us moving forward. This is from Yahoo Finance the other day. There's an ugly trend developing in the stock market. They talk about the market leaders quickly becoming laggards. They say some pros warn it could be sending a near-term negative sign for the broader markets. Now, the market leaders, well, they're no longer leading. We're talking, of course, about the Magnificent Seven: Microsoft, Apple, Tesla, Google, Meta, Amazon, Nvidia. These are once upon a time the darlings of the market. No more. Here's the S&P 500 in the daily chart. That's a 20-90 simple moving averages, just for some perspective. Long-term trend to the upside still looks like it's intact. Looks pretty good. Here's Microsoft. This was once upon a time a darling in the market. Well, now that's breaking down pretty severely, below $400. Here's Meta. That's broken down. Once upon a time was at 740. Now it's closer to 640. Here's Tesla. That broke down a lot. That's near November lows. Here's another one. Apple. Triangle consolidation pattern. Not making highs anytime soon. Here's another one. Apple, otherwise known as Google. Well, that's broken down. That's at December lows. And Amazon, breaking down to November lows. That chart does not look good at all. And last but not least, the biggest name of the year, Nvidia. Well, that has been a disappointment lately, to say the least. Well, this has happened before. Let's go back in time to the year 2000. Here's the S&P 500 at the time. Long-term trend to the upside. Looks pretty familiar, actually. Well, this is June of 2000. And while the stock market looked like it was challenging new highs, these were once upon a time the leaders, like Microsoft, but that had broken down pretty severely. At the same period of time, Cisco, that fell into a consolidation pattern. Here's another name at the time, Intel. Well, that's in a triangle consolidation pattern. Once upon a time, that was one of the strongest stocks in the markets. Here's Oracle. That broke down pretty severely as well. Kind of looks like Tesla. Here's IBM. Long-term consolidation pattern as well. Point being is that the leaders of the time stopped leading while the overall index kept on going up, but we know what ensued shortly after. So what's next for us now? What does this all mean? Well, new leaders will emerge, but only when there's a fundamental change. You see, the leaders like Tesla and Nvidia, they went up for a reason. Well, that reason no longer exists. So the market doesn't really have any leadership, and that's not good. We need a reason for a new bull market. That will take some time. Does this mean the stock market's going to crash tomorrow? Not necessarily, but it does put us in a precarious position without leadership. But wait, there's something else we have to talk about. The next rate cut may be coming soon. In yellow, that's the S&P 500. In blue, that's 4.25 to 4.5. In other words, the probabilities the Fed will not cut rates in June. Lately, stock market weakness has correlated with declining probabilities the Fed will not cut rates in June. Here's another way to look at it. In blue, that's 4.25 to 4.5. In other words, the probability the Fed will not cut rates. In red, the probability of a rate cut. In May, we had a 78% chance the Fed would not cut rates. But in the June meeting, there's now a 78% chance the Fed will cut rates. And that is a big shift. That, in part, correlates to the weakness in the stock market, bad consumer confidence numbers we've seen lately, correlating to a weak 10-year bond treasury as yield. But there has been a shift. Now, on the economic calendar, well, before we get to the economic calendar, there's another big event this week. Nvidia earnings. That's expected Wednesday after the close. That could be a market-moving event. Also on Wednesday, new home sales. On Thursday, durable goods. Also on Thursday, gross domestic product. Wrapping up the week, PCE, personal consumption expenditure. That's a big inflation number. So, given the fact that we don't have leadership, it does put the market in a vulnerable state. Again, it doesn't mean the market's going to crash tomorrow, but it does leave us open for a catalyst like a bad economic number, poor Nvidia earnings, or maybe something else unexpected. We hope this has been helpful. We look forward to seeing you back soon.